If you think the world's greatest investors were born smarter than you, Ray Dalio's story will challenge that belief immediately. Ray Dalio, the founder of Bridgewater Associates, one of the most successful hedge funds in history, did not start with money, power, or elite connections. He didn't grow up inside Wall Street. He didn't have a master plan. What he had was something much simpler and much more powerful: curiosity. As a teenager, Ray worked as a caddy at a golf course. His job was basic: carry clubs, clean balls, stay out of the way. But while he was standing there, doing what looked like nothing, he was listening. Around him were business owners, executives, investors, people who spoke openly about stocks, deals, risk, and money. Ray didn't understand most of what they were saying, but he paid attention. And that's where his journey really began. One of the core ideas and principles shows up right here, at the start of his life. Successful people don't begin with answers, they begin with questions. Ray started asking himself things like, why do some people consistently make money while others don't? Why do markets rise and fall? Is there a system behind success, or is it all luck? This mindset led him to buy his first stock at the age of 12. It wasn't a huge investment, but it doubled. That moment wasn't important because of the money, it was important because it revealed something deeper. Ray realized that money moves according to rules. Markets aren't magic. They respond to cause and effect, and that insight became the foundation of everything that followed. Here's the big lesson from Chapter 1. Life is like a game, and every game has rules. Most people are playing without ever bothering to learn them. They hope, they guess, they blame bad luck when things go wrong. Ray Dalio took a different approach. Instead of assuming he was smart, he assumed reality was smarter than him. Instead of trusting his instincts, he studied patterns. Instead of pretending to know, he admitted when he didn't. That humility gave him an unfair advantage. Think about how this applies to your own life. A lot of people want more money, better careers, or financial freedom, but they don't spend time around people who understand how those things actually work. They don't read, they don't observe, they don't analyze decisions and outcomes. Ray didn't try to sound intelligent. He tried to understand reality. And that's why this first chapter is called My Call to Adventure. Not because it's glamorous, but because it marks the moment Ray chose to stop drifting and start learning how the world actually works. So here's the practical takeaway for you. If you want to improve your finances, study how money really moves. If you want to make better decisions, observe people who consistently make good ones. If you want to change your life, stop hoping and start learning the rules of the game you're in. Ray Dalio didn't succeed because he avoided mistakes. He succeeded because he treated life as a system to be understood, not a lottery to be won. And the most important question after this episode is simple. Are you learning the rules of the game you're playing, or are you just reacting and hoping things work out? In the next chapter, Ray takes his first real risk and steps outside safety for the first time. And that's where things get uncomfortable, because growth always does. This is where the real journey begins. Every major turning point in life starts with the same feeling: discomfort. For Ray Dalio, Chapter 2 begins the moment he realizes that curiosity alone isn't enough. At some point, learning has to turn into action, and action always carries risk. After college, Ray landed a stable job on Wall Street. He was doing what society considers the right thing: good position, good pay, clear path forward. From the outside, everything looked secure. But internally, Ray felt something else. He noticed that most people around him weren't really thinking independently. They were following trends, copying opinions, reacting emotionally to markets. And Ray started to believe that if he truly wanted to understand how the system worked, he couldn't just stay inside it. He had to test his ideas in the real world. So he crossed the threshold. He left the safety of a traditional career and started investing on his own. This moment matters because it introduces a principle that shows up again and again in Ray Dalio's life. Progress requires stepping into uncertainty before you feel ready. Most people wait for confidence. Ray waited for understanding, and even then, he knew he could be wrong. Early on, he made bold predictions about the economy. Some of them worked. That success gave him confidence, maybe too much confidence. He started believing that being right a few times meant he understood the system completely, and that belief pushed him to take bigger risks. Here's the lesson hiding beneath this chapter. Taking risks is necessary, but unmanaged confidence is dangerous. Crossing the threshold doesn't mean being reckless. It means making deliberate bets while accepting that you don't control outcomes. This is where Ray's thinking begins to separate from the average person. Most people avoid risk because they fear losing. Ray accepted risk because he feared staying ignorant. He believed that real learning only happens when your ideas collide with reality. If your model survives, you grow. If it breaks, you learn. That mindset is incredibly relevant today. A lot of people want to improve their finances, start a business, or invest, but they stay stuck in preparation mode. They read endlessly, watch videos, plan forever but never step forward. Ray shows us that learning without exposure is an illusion. At some point, you need skin in the game. The practical takeaway from this chapter is simple, but uncomfortable. Growth happens at the edge of your comfort zone, not inside it. That doesn't mean quitting your job tomorrow or going all in on a risky bet. It means creating controlled exposure, small risks, real feedback. Ray didn't jump blindly. He tested, he observed, he adjusted, and most importantly, he accepted that being wrong was part of the process, not something to be ashamed of. Crossing the threshold is the moment you stop asking, "What if I fail?" and start asking, "What will this teach me?" That shift in thinking changes everything. Because once you see life as a series of experiments instead of a single exam, failure loses its power over you. And that's exactly what sets up the next chapter. In the next episode, Ray Dalio experiences something every ambitious person eventually faces, a massive, public failure that nearly ends his career. Not a small mistake, but a complete collapse. And what he does after hitting rock bottom is the reason Principles exists at all. If you're serious about building financial intelligence, this is where the story gets real. Every success story eventually reaches a moment no one likes to talk about. For Ray Dalio, that moment came fast and it came hard. After crossing the threshold and gaining early confidence, Ray started to believe he understood the economy better than most people around him. He had made correct calls before, and those wins reinforced a dangerous idea that being right a few times meant he was right in general. Then reality stepped in. Ray made a major prediction that the economy was heading toward a depression. He was confident. He spoke publicly. He positioned his investments around that belief. And he was completely wrong. Not a little wrong, completely wrong. The economy did not collapse. Markets moved against him. His firm lost money rapidly. Clients left. Eventually, Ray Dalio went broke. He had to lay off employees. At one point, he was so short on cash that he had to borrow money from his father just to survive. This was not just a financial failure. It was an identity crisis. Ray wasn't just wrong, his confidence was exposed. His reputation took a hit. And worst of all, the story he had been telling himself about being smart fell apart. This chapter matters because it introduces one of the most important ideas in Principles. Pain is not the enemy. Unexamined pain is. Most people experience failure and immediately try to escape it. They blame the market. They blame timing. They blame bad luck. Or they shut down entirely. Ray did something different. Instead of asking, "How did this happen to me?" he asked, "What am I missing?" That question changed everything. Ray realized that his biggest mistake wasn't the wrong prediction, it was overconfidence. He had confused confidence with correctness. He trusted his intuition more than reality, and the market punished him for it. This led to a breakthrough idea that would shape his entire career. Pain plus reflection equals progress. Failure becomes valuable only when you analyze it honestly. From that moment on, Ray committed to a new way of thinking. He stopped trying to be the smartest person in the room. Instead, he focused on building systems that could catch his blind spots. He learned to write down his mistakes. He studied patterns in where his thinking failed. He treated every loss as data. This is where Principles is truly born, not from success, but from collapse. And this lesson is incredibly relevant to real life. Everyone loses money at some point. Everyone makes bad decisions. Everyone gets something wrong that they were sure about. The difference between people who grow and people who repeat the same mistakes is reflection. If you lose money and only feel pain, you lose twice. If you lose money and extract the lesson, you gain something that compounds. The practical takeaway from this chapter is simple, but uncomfortable when you fail. Don't defend yourself, study yourself. Ask what assumption was wrong. Ask what information you ignored. Ask what emotion influenced the decision. Ray Dalio didn't become successful by avoiding failure. He became successful by building a process that turned failure into feedback. And that mindset is what sets up the next chapter. Because once Ray accepted that he couldn't trust his instincts alone, he began building something powerful, a method to systematically learn from mistakes and turn chaos into clarity. In the next episode, we'll see how Ray transforms his lowest point into the foundation of his future success, and how you can do the same the next time life proves you wrong. After hitting rock bottom, most people try to forget the experience as fast as possible. Ray Dalio did the opposite. Chapter 4 is where Ray stops seeing failure as a one-time disaster and starts seeing it as a pattern that can be studied, improved, and eventually mastered. Coming out of his collapse, Ray made a critical decision. Instead of trusting his memory or emotions, he would start writing everything down, every mistake, every bad decision, every outcome that surprised him. Why? Because memory lies but data doesn't. Ray noticed something uncomfortable. The same types of mistakes kept showing up again and again. Overconfidence, ignoring contradictory information, making decisions based on intuition instead of evidence. This was his road of trials. Not a single challenge but a long stretch of repeated tests, where reality kept exposing the same weaknesses in his thinking. And here's the key insight from this chapter. Progress doesn't come from avoiding mistakes. It comes from identifying the patterns behind them. Most people treat each failure as a separate event. Ray treated failures like symptoms of a deeper problem. So instead of asking, "What went wrong this time?" he asked, "What is wrong with my decision-making process?" That shift changed everything. Ray began turning mistakes into rules. If a certain type of thinking led to a bad outcome, he wrote a principle to prevent it next time. Over time, these principles became a personal operating system, a way to make decisions that didn't rely on mood, confidence, or ego. This is the moment where Ray stops trying to be right and starts trying to be consistent. And this idea applies far beyond investing. Think about your own life. How many times have you made the same mistake with money, relationships, or work, just in a different form? Overspending, procrastination, ignoring red flags. The problem isn't the situation. The problem is the pattern. The practical lesson from this chapter is powerful. If you want better results, don't just focus on outcomes, focus on the process that creates them. Ray learned that emotions are signals, not guides. Feeling confident doesn't mean you're right. Feeling scared doesn't mean you're wrong. What matters is whether your decision-making system is sound. So he built one. He reviewed decisions after they happened. He tracked what assumptions failed. He improved his principles based on real feedback. This is slow, uncomfortable work, but it compounds. Most people want shortcuts. Ray wanted accuracy. And over time, this discipline gave him something rare, the ability to learn faster than others from the same experiences. Chapter 4 shows us that mastery isn't dramatic. It's repetitive, it's boring, and it's incredibly effective. If you want to apply this to your own life, start small. After a bad decision, don't move on too quickly. Write down what you thought would happen and what actually happened. Look for the gap. That gap is where growth lives. Ray Dalio didn't become successful by making fewer mistakes than everyone else. He became successful by extracting more value from each one. And in the next chapter, we'll see how these personal principles turn into something much bigger, a system that scales beyond one person and begins to create extraordinary results. Because once you stop relying on instinct and start relying on principles, everything changes. After years of failure, reflection, and trial, Ray Dalio finally reached a turning point. Chapter 5 is where everything starts to come together. Up to this point, Ray had learned how unreliable intuition could be. He had seen how ego distorted judgment and how emotions sabotaged decision-making. But now he faced a bigger question. How do you make great decisions consistently, not just once? But over and over again? The answer Ray arrived at was simple, but radical. You don't rely on people. You build systems. Ray realized that the best outcomes didn't come from moments of brilliance. They came from repeatable processes. If he could design a machine that made decisions based on logic, data, and tested principles, that machine would outperform human emotion every time. This idea became the foundation of Bridgewater Associates. Instead of asking, "What do I feel like doing?" Ray asked, "What does the system say should be done?" He broke investing down into cause and effect relationships. If certain economic conditions existed, certain market outcomes were more likely. Those relationships were documented, tested, refined, and eventually automated. This was the ultimate reward of Ray's long road of trials, clarity. Here's the core lesson of this chapter: systems beat individuals. Most people think success comes from working harder or being smarter. Ray learned that success comes from designing a process that works even when you're tired, emotional, or wrong. This is why Bridgewater didn't depend on one genius trader. It depended on rules. And this lesson applies far beyond hedge funds. Think about personal finance. Most people rely on willpower to save money, but willpower fades. Systems don't. Ray didn't trust himself to always make the right choice, so he designed an environment where the right choice happened automatically. Automatic investing, clear rules, predefined responses to common situations. That's how consistency is built. Another key idea in this chapter is that great systems evolve. Ray didn't assume his principles were perfect. He treated them like software constantly updated based on new information. When a principle failed, it wasn't ignored, it was improved. This is a crucial mindset shift. Most people defend their beliefs. Ray tested his beliefs. That willingness to let ideas compete is what turned Bridgewater into a scalable machine, rather than a personality-driven firm. The practical takeaway from Chapter 5 is powerful. If you want long-term success, stop relying on motivation and start building structure. Create rules for your money. Create systems for your work. Create checklists for important decisions. When you do this, you remove emotion from moments where emotion is most dangerous. Ray Dalio didn't become successful by trusting himself more. He became successful by trusting systems more than himself. And that insight is what allowed his ideas to grow beyond one person. In the next chapter, we'll see how Ray takes these personal principles and begins sharing them, transforming individual discipline into a culture that could scale across an entire organization. Because once you build a machine that works, the next challenge is teaching others how to run it. There's a moment in every successful journey where the question changes. It's no longer, "Can I do this?" It becomes, "Can this work without me?" That's what Chapter 6 is about. By this point, Ray Dalio had built principles that worked. His systems produced results. Bridgewater was growing, and for the first time, Ray faced a new challenge: not failure, but scale. He realized something uncomfortable. If the success of the company depended entirely on his presence, then it wasn't truly successful. It was fragile. So Ray made a decision that most people avoid. He started giving away his thinking. He wrote down his principles in detail. He explained how decisions were made, why certain rules existed, and what logic sat behind them. He didn't keep knowledge as power, he treated it as infrastructure. This is the core idea of returning the boon. Real success isn't proven by what you can do alone, but by what continues to work when you step back. Most people instinctively protect what makes them valuable. Ray did the opposite. He believed that if his ideas were truly strong, they should survive criticism, replication, and independence. This required a massive shift in mindset. Instead of being the smartest person in the room, Ray wanted to build a room that could think for itself. That meant transparency. That meant documentation. That meant allowing others to challenge his logic openly. And that wasn't easy. When you share your thinking, you expose your flaws, you invite disagreement, you give up control. But Ray understood something critical. Teaching forces clarity. If you can't explain your reasoning clearly enough for others to follow it, then you don't understand it well enough yourself. This chapter reinforces a powerful principle. Scalable success requires transferable thinking. In business, in leadership, and even in personal finance, systems that only exist in your head can't grow. They die with your attention. Ray wanted Bridgewater to function like a machine, one where decisions were made based on principles, not personalities. And this approach didn't just strengthen the company, it strengthened the ideas themselves. When others applied the principles, they found weaknesses. Those weaknesses led to improvements. The system evolved. That's how durability is built. Now let's bring this back to your own life. Most people learn lessons the hard way but never pass them on. They repeat the same explanations, the same mistakes, the same emotional decisions. The practical takeaway from this chapter is simple. Write down what works. If you've learned how to budget effectively, document it. If you've developed a rule for investing, formalize it. If you've made costly mistakes, turn them into guidelines. When you do this, you stop relearning the same lessons over and over again. Ray Dalio didn't return the boon because he was generous. He did it because he understood leverage. Ideas that live only in your head have limited value. Ideas that are shared, tested, and improved can outlast you. And that sets up the next phase of his journey. In the next chapter, Ray faces his hardest challenge, yet not building success, but letting go of control and preparing for a future where he's no longer at the center. Because the final test of any system is whether it works without its creator. There's a challenge that almost no one prepares for. It's not starting from zero. It's not failing. It's knowing when to step back. Chapter 7 is where Ray Dalio faces the hardest test of his entire career, not building Bridgewater, but learning how to let it run without him. After decades of shaping the firm, making key decisions, and refining its principles, Ray reached a point where the company was successful but still deeply connected to him. And that created a risk. If Bridgewater needed Ray Dalio every day, then it wasn't a durable institution. It was a personality-driven organization. Ray understood something that most leaders avoid. If you don't design your exit, reality will design it for you. So he began the most uncomfortable phase of his journey, preparing to step out of the center. This process exposed a brutal truth. Systems are only as strong as their weakest moments, and the weakest moment for any system is transition. Ray had to test whether the principles he built could survive disagreement, misalignment, and even failure without him stepping in to fix everything. And they didn't always work. There were conflicts. There were wrong decisions. There were moments where Ray wanted to take control again. But that's the point. This chapter reinforces a powerful idea. True leadership isn't about being needed. It's about building something that doesn't need you. Most people equate value with control. Ray redefined value as resilience. He allowed others to make decisions even when they made mistakes, because protecting the system mattered more than protecting his ego. That's incredibly difficult. When you've spent years being right, stepping back feels like watching someone drive your car in the dark. But Ray knew that interference would only delay the inevitable. Either the system worked or it didn't. And if it didn't, it needed to be fixed, not rescued. This lesson applies far beyond business. In personal finance, many people become the bottleneck. They manage everything manually. They make every decision emotionally. And when life gets busy or stressful, the system collapses. Ray's approach was different. He believed that a well-designed system should handle stress, not break under it. The practical takeaway from Chapter 7 is this. Long-term success requires preparing for your own absence. Build systems that function when you're tired. Create rules that protect you when emotions run high. Design processes that don't depend on constant attention. Ray Dalio's greatest challenge wasn't failure or success, it was trust. Trusting the principles, trusting the people, trusting the machine he spent a lifetime building. And that trust is what allowed Bridgewater to move beyond its founder. In the next chapter, Ray steps back and looks at his entire life from a higher level, connecting the patterns, cycles, and principles that governed everything he experienced. Because once you stop being inside the game, you can finally see how it was played. At some point in life, if you're lucky, you get the chance to zoom out. Chapter 8 is that moment for Ray Dalio. After decades of building, failing, refining, letting go, and rebuilding, Ray steps back and looks at his entire life not as a series of isolated events, but as one connected system. And what he sees is something most people never stop long enough to notice. Patterns. Ray realized that almost everything meaningful in his life followed repeating cycles. Success followed failure. Confidence followed humility. Growth followed pain. The details changed, but the structure stayed the same. This is the core idea of this chapter. Events feel unique when you're inside them, but patterns become obvious when you zoom out. When Ray was young, he thought his wins and losses were personal. Later, he understood they were structural. The same cause and effect relationships kept playing out, whether in markets, businesses, or his own behavior. That realization changed how he viewed life. Instead of reacting emotionally to what was happening, Ray started asking a different question. Where am I in the cycle? Am I learning? Am I testing? Am I overconfident? Am I being corrected by reality? This perspective gave him calm in moments that usually create panic. Most people experience life one moment at a time. They overreact to short-term outcomes. A bad month feels like failure. A good week feels like mastery. Ray learned that neither means much on its own. What matters is trajectory. Here's an important insight from this chapter. You can't control individual outcomes, but you can control the process that produces them. Once Ray saw his life as a system, he stopped obsessing over single decisions and focused on whether his principles were being followed consistently. This mindset is incredibly powerful in today's world, where everything pushes us to think short-term. Markets move daily, news updates constantly, social media magnifies noise. Ray's approach cuts through that chaos. He believed that if you understand the big picture, how cycles work, how incentives shape behavior, how systems evolve, you stop being surprised by reality. You might not predict exact outcomes, but you won't be shocked by them either. The practical takeaway from Chapter 8 is simple but profound. Zoom out regularly. Look at your life over years, not weeks. Judge your progress by direction, not speed. Ask whether your habits align with the person you're trying to become. Ray Dalio didn't see his life as a straight line upward. He saw it as a loop: learn, test, fail, adapt, repeat. And once you accept that loop, failure stops feeling final. It becomes expected. This chapter closes part 1 of Principles with a powerful shift. Ray is no longer just telling his story. He's preparing you to think the way he thinks. Because once you understand that life operates in patterns, you stop taking things personally and start taking responsibility for the systems you live inside. In the next episode, we move from Ray's life story into the core of the book, the life principles themselves. This is where his experiences turn into tools you can apply immediately. And this is where Principles stops being a story and starts becoming a manual. There's a simple truth most people spend their entire lives trying to avoid. Reality doesn't care what you want. Chapter 9 is where Principles officially shifts from Ray Dalio's life story to his operating philosophy. And it starts with the most uncomfortable rule of all. If you want to succeed at anything, you have to see the world as it is, not as you wish it were. Ray learned this lesson the hard way. Every major failure in his life came from the same root cause. Not lack of effort, not bad intentions, but refusing, even subtly, to accept reality. Markets didn't behave the way he expected. People didn't act the way he assumed. Outcomes didn't match his confidence. And each time, reality won. So Ray stopped fighting it. This chapter introduces a core belief that shapes everything else in the book. Reality is the ultimate boss. You don't negotiate with it. You don't argue with it. You deal with it. Most people don't do this. They ignore bad numbers. They rationalize bad decisions. They blame circumstances instead of adapting to them. Ray calls this self-deception, and he believes it's one of the biggest obstacles to success. Here's the key idea. Truth is more important than comfort. Reality can be painful. It exposes weaknesses. It forces change. But it also provides accurate feedback, and feedback is the only thing that allows improvement. Ray believed that pain is a signal, not a punishment. If something isn't working, that discomfort is information. And ignoring that information doesn't protect you, it delays growth. This principle shows up everywhere, especially in money. Investors lose money not because they lack intelligence, but because they cling to opinions that no longer match reality. They hope a stock recovers. They believe the market is wrong. They emotionally attach to positions. The market doesn't care. Ray's approach was different. When reality contradicted his view, he assumed reality was right, and he was wrong until proven otherwise. That mindset is incredibly powerful. It removes ego from decision-making. It turns mistakes into data. It replaces defensiveness with curiosity. And it's not just about investing. In personal life, many people avoid reality by avoiding numbers. They don't look at their bank accounts. They don't measure progress. They don't track habits. Ray would argue that avoiding reality doesn't make it better, it makes it more dangerous. You can't fix what you refuse to see. The practical takeaway from this chapter is simple but challenging. Face the truth, especially when it's uncomfortable. Look at your finances honestly. Look at your performance objectively. Look at your habits without excuses. Ray believed that once you fully accept reality, solutions become much easier to find. You stop wasting energy wishing things were different and start focusing on what actually works. This is why he valued radical honesty not as a moral virtue, but as a practical tool. The faster you get to the truth, the faster you can adapt. Embracing reality doesn't mean being pessimistic. It means being accurate. And accuracy compounds. When you consistently align your decisions with how the world actually works, instead of how you want it to work, progress becomes inevitable. This chapter lays the foundation for everything that comes next, because once you accept reality, you can start improving it systematically. In the next episode, Ray introduces a structured process for turning goals into results, a framework designed to work, precisely because it's grounded in reality, not optimism. Because dreams are easy, execution is hard, and reality decides who wins. Most people don't fail because they lack ambition. They fail because they don't have a process. Chapter 10 introduces one of Ray Dalio's most practical ideas, the 5-step process for turning goals into results, not motivation, not visualization, a repeatable system that works in real life. Ray realized something simple but uncomfortable. Almost everyone wants success, but very few people think systematically about how success actually happens. They set goals, they hit obstacles, they get frustrated, and then they quit or start over. Ray believed that progress doesn't come from avoiding problems. It comes from using problems correctly. So he broke growth down into 5 clear steps. Step 1. Set clear goals. This sounds obvious, but most people skip it. They say things like, I want to be successful or I want more money. Those aren't goals, they're wishes. Ray believed a real goal is specific enough to guide decisions. If you don't know exactly what you're aiming for, you can't measure progress or adjust intelligently. Step 2. Identify the problems standing in your way. Here's where most people get stuck. They see problems as failures instead of signals. Ray saw problems as the price of progress. If you're not encountering problems, you're not pushing hard enough. The key is to stop being emotional about obstacles and start being analytical. Problems aren't personal, they're expected. Step 3. Diagnose the root cause. This is the most important step and the most ignored. Most people treat symptoms, not causes. They lose money and blame bad luck. They miss deadlines and blame stress. But Ray insisted on digging deeper. What habit caused this? What assumption was wrong? What pattern keeps repeating? Without diagnosis, solutions don't last. Step 4. Design a solution. Once you understand the real cause, you can design a response that actually works. Not a temporary fix, but a structural change. This might mean changing a rule, a habit, or a system. The goal isn't comfort, it's effectiveness. And finally, step 5. Execute relentlessly. A good plan poorly executed fails. Ray believed execution requires discipline, tracking, and accountability. You don't just decide, you follow through and measure results. Then, and this is crucial, the process loops. After execution, you look at outcomes and start again. New goals, new problems, new improvements. This loop is how progress compounds. Here's the core insight of this chapter. Success is not a straight line, it's a cycle. Most people get discouraged because they expect progress without friction. Ray expected friction and built a system to move through it. This framework applies directly to money. If your goal is financial stability, the problems might be overspending or inconsistent income. The diagnosis might be emotional spending or lack of structure. The solution could be automation. Execution means sticking to it even when it's boring. Ray's process removes emotion from growth. It replaces vague effort with deliberate improvement. The practical takeaway from Chapter 10 is powerful. Stop reacting to life and start iterating through it. Write your goals down. List your problems honestly. Diagnose without excuses. Design systems, not wishes. Execute consistently. Ray Dalio didn't build success by hoping things worked out. He built it by repeatedly running this process over decades. And once you internalize this loop, failure stops feeling like the end. It becomes step 2. In the next chapter, Ray introduces another uncomfortable but critical idea. The fastest way to make better decisions is to become radically open-minded even when it hurts your ego. Because the biggest obstacle to progress isn't lack of effort. It's refusing to see what you're missing. If there's one thing that quietly destroys good decisions, it's ego. Chapter 11 introduces one of Ray Dalio's most uncomfortable and most powerful principles: radical open-mindedness. Ray came to a hard realization over time. Most people don't fail because they lack intelligence. They fail because they're too attached to their own opinions. They fall in love with their ideas. They defend them, and when reality disagrees, they argue instead of listening. Ray had seen this pattern everywhere, especially in himself. Earlier in his career, his worst losses didn't come from lack of effort or data. They came from being too confident in his own perspective and dismissing opposing views too quickly. That's when he began to understand something critical. The quality of your decisions depends on how willing you are to question your thinking. Radical open-mindedness doesn't mean agreeing with everyone. It means recognizing that your view is incomplete. No matter how smart you are, you only see part of the picture. Ray believed that every decision is like a puzzle. If you only look at it from one angle, you're almost guaranteed to miss something important. So instead of asking, "How do I prove I'm right?" he started asking, "What am I missing?" That shift changed everything. At Bridgewater, Ray built a culture where disagreement wasn't just allowed, it was required. People were encouraged to challenge ideas openly, even if it meant confronting senior leaders or Ray himself. Why? Because the goal wasn't to win arguments. The goal was to get closer to the truth. Here's a key insight from this chapter. Truth is discovered through thoughtful disagreement, not agreement. Most people avoid disagreement because it feels uncomfortable. It threatens identity. It creates tension. But Ray saw discomfort as a signal that learning might be happening. If everyone agrees with you, you're probably stuck in an echo chamber. Radical open-mindedness also requires humility. You have to accept that being wrong is not a personal failure. It's a normal part of making good decisions in a complex world. This is especially important in investing. Markets are competitive environments. If you're right, someone else is wrong. And often, that other person might know something you don't. Ray wanted to hear opposing views before the market forced him to. He believed that thoughtful disagreement, combined with evidence, was the fastest way to reduce blind spots. Now let's bring this principle into everyday life. Most bad financial decisions happen because people seek confirmation, not contradiction. They listen to opinions that support what they already believe and ignore warnings that feel uncomfortable. Ray's approach flips that instinct. When making an important decision, actively seek out smart people who disagree with you. Not to argue, but to understand their reasoning. You don't have to follow their advice, but you should seriously consider it. The practical takeaway from Chapter 11 is simple but challenging. Don't confuse confidence with correctness. Build the habit of asking questions like, what evidence would prove me wrong? Who sees this differently, and why? What assumptions am I making without realizing it? Radical open-mindedness is a skill. It takes practice, and it never feels natural. But over time, it dramatically improves decision quality. Ray Dalio didn't become successful by always being right. He became successful by being willing to change his mind faster than others. And that ability to update your thinking when new information appears is one of the most valuable skills you can develop. In the next chapter, Ray takes this idea even further by explaining why people think so differently in the first place, and why understanding those differences can make you a far better decision maker. Because once you stop assuming everyone sees the world the way you do, you start making decisions that actually work. One of the biggest mistakes people make in life is assuming that everyone thinks the way they do. Chapter 12 challenges that assumption directly. Ray Dalio realized over time that many conflicts, bad decisions, and failed collaborations didn't come from bad intentions, they came from misunderstanding how differently people are wired. People don't just have different opinions, they have different brains. Some people think fast and intuitively. Others think slowly and analytically. Some focus on big ideas. Others obsess over details. And none of these are inherently right or wrong. Early in his career, Ray expected people to see problems the way he did. When they didn't, he assumed they were careless, stubborn, or incompetent. Over time, he learned a humbling truth. They weren't wrong, they were different. This insight changed how he made decisions. Instead of asking, "Why don't they get it?" Ray started asking, "How are they seeing this differently?" This chapter introduces a powerful idea. Good decisions come from combining different types of thinkers, not forcing everyone to think the same way. At Bridgewater, Ray observed that the best outcomes happened when creative thinkers and detail-oriented thinkers worked together. Vision without execution failed. Execution without vision stalled. The problem wasn't disagreement. The problem was misalignment. Most people experience this in everyday life. You explain something clearly, but the other person still doesn't understand. You assume they're not listening, but often they're processing information through a completely different mental filter. Ray believed that understanding how people are wired allows you to place them where they naturally perform best. This is a huge shift from how most organizations operate. Instead of asking people to change who they are, Ray focused on designing roles around their strengths and weaknesses. He didn't expect a creative thinker to be detail-obsessed. He didn't expect a cautious thinker to move fast. He accepted reality and worked with it. This principle is especially important in leadership and money. Many financial mistakes happen because people follow advice that doesn't match their temperament. A strategy that works for a risk-tolerant investor can destroy someone who panics easily. Ray believed that self-awareness matters more than intelligence. You don't need the best strategy. You need the strategy you can actually stick with. The practical takeaway from Chapter 12 is simple but powerful. Stop judging differences and start using them. Understand how you are wired. Understand how others are wired. Then design decisions, systems, and roles that fit reality. When you do this, conflict decreases and performance improves. Ray Dalio didn't try to turn everyone into the same thinker. He built teams where differences complemented each other. And this applies to your life as well. If you know you're emotional, build systems that protect you. If you know you're overly cautious, create rules that force action. If someone thinks differently than you, don't dismiss them, listen. Understanding differences doesn't weaken decisions, it strengthens them. In the next chapter, Ray brings all of this together by explaining how to make high-quality decisions, consistently using principles, probabilities, and logic instead of emotion. Because once you understand reality, process, and people, the final step is learning how to choose wisely. Every outcome in your life is the result of a decision. Your income, your career, your relationships, your stress level. Chapter 13 brings all of Ray Dalio's life principles together into one central question. How do you consistently make good decisions in a complex, uncertain world? Ray believed that most people rely on feelings when they decide. They go with gut instinct, emotion, or recent experience. Sometimes that works, but over time, it creates wildly inconsistent results. Ray wanted something better than instinct. He wanted a decision-making process that worked even when emotions were high, information was incomplete, and stakes were real. So he treated decisions like bets. Every decision, Ray believed, is a probability-weighted gamble. You never know outcomes for sure, but you can estimate what's more likely to work based on evidence, logic, and past experience. This mindset changes everything. Instead of asking, "What do I feel like doing?" Ray asked, "What's the most logical choice given the probabilities?" To do this, he relied on principles. Principles are simply rules that come from experience. They're condensed lessons from past successes and failures. When faced with a decision, Ray didn't start from scratch. He checked which principles applied. This allowed him to act quickly without being reckless. Another key idea in this chapter is triangulation. Ray believed that no single perspective is enough, So when making important decisions, he combined three things: his own thinking, data, and the views of credible people who had proven track records. Not popular opinions, not loud voices, credible thinkers with evidence behind them. This dramatically reduced blind spots. Most people either think alone or blindly follow others. Ray did neither. He blended perspectives intelligently. This approach is especially powerful in investing and life decisions. Markets are uncertain. Careers are uncertain. Relationships are uncertain. Waiting for certainty means never acting. Ray accepted uncertainty and designed around it. The practical takeaway from Chapter 13 is this: stop treating decisions as emotional moments and start treating them as processes. Before deciding, ask, what principles apply here? What has worked before in similar situations? What are the probabilities? Who has made this decision successfully before? When you do this consistently, decision quality improves even if outcomes don't always go your way. Ray Dalio didn't aim to always be right. He aimed to be wrong less often and recover faster when he was. That's the real secret. Good decision-making isn't about brilliance. It's about structure. It's about humility. And it's about learning faster than reality can punish you. This chapter closes the life principles section of principles. From here on, Ray moves into how these ideas scale inside organizations, how culture, people, and systems either amplify good decisions or destroy them. Because once you learn how to decide well as an individual, the next challenge is building environments where good decisions happen naturally, even when you're not in the room. And that's where things get truly interesting. Most people think success in organizations comes from smart strategies. Ray Dalio disagrees. Chapter 14 starts the work principles with a hard truth. If your culture is broken, no strategy will save you. Ray learned this through experience. As Bridgewater grew, he saw that even the best ideas failed when people were afraid to speak honestly, avoided responsibility, or protected their egos. Decisions got slower, mistakes repeated. Reality was filtered instead of confronted. And that's when Ray realized something critical. Culture is the environment in which decisions are made. If that environment discourages truth, the quality of decisions collapses no matter how talented the people are. So Ray made culture the top priority. The core idea of this chapter is simple, but uncomfortable. Great cultures are built on truth and transparency, not comfort. At Bridgewater, Ray pushed for what he called radical truth and radical transparency. People were expected to speak honestly, even when it felt awkward. Problems weren't hidden. Mistakes weren't softened. Feedback wasn't personalized, it was factual. Why would anyone choose that? Because Ray believed that reality only works one way. If you distort it to protect feelings or politics, you pay the price later, usually in bigger failures. Most organizations do the opposite. They avoid conflict. They sugarcoat feedback. They reward agreement over accuracy. Ray saw this as dangerous. He believed that a strong culture isn't one where people feel good all the time. It's one where problems surface quickly and get solved. That doesn't mean being harsh or disrespectful. It means prioritizing truth over comfort. This chapter makes an important distinction. Being nice and being kind are not the same. Being nice avoids hard conversations. Being kind tells the truth early, before damage compounds. Ray wanted a culture where people could disagree without fear, challenge ideas without attacking people, and focus on what's right instead of who's right. And this wasn't theoretical. Bridgewater built systems to support this culture. Meetings were recorded. Feedback was structured. Decisions were reviewed openly. The goal wasn't control, it was clarity. Now let's bring this into real life. Whether you're part of a company, a small team, or even a family, culture shapes outcomes. If people can't speak honestly, problems don't disappear, they grow quietly. The practical takeaway from Chapter 14 is this: if you want better results, fix the environment where decisions are made. Encourage honest feedback. Reward truth, not agreement. Make it safe to surface problems early. This applies directly to personal finance too. If you lie to yourself about spending, debt, or risk, the numbers don't change, they just surprise you later. A culture of honesty starts internally. Ray Dalio believed that culture is destiny. Get the culture right, and even imperfect people make good decisions. get it wrong, and even brilliant people fail together. This chapter sets the foundation for everything that follows in the work principles. Because once you create an environment that values truth, the next challenge is putting the right people into that environment. And that's exactly where Ray goes next. In the next episode, we'll break down why having the right people matters more than having the right ideas, and how misaligned people can quietly destroy even the best systems. Ideas don't build great organizations. People do. Chapter 15 focuses on one of Ray Dalio's strongest beliefs. Having the right people is more important than having the right ideas. Ray learned this lesson the hard way, over time. He noticed that the same brilliant ideas succeeded in some hands and failed completely in others. The difference wasn't intelligence. It wasn't effort. It was fit. Some people were great thinkers but poor executors. Some were reliable operators but terrible decision makers. Some looked impressive on paper but consistently made bad judgments under pressure. Ray realized that if you put the wrong people in the wrong roles, no amount of strategy will save you. This chapter introduces a key idea. People are not good or bad in general. They are good or bad at specific things. Most organizations ignore this. They hire based on resumes, credentials, or confidence. Then they're surprised when performance doesn't match expectations. Ray refused to play that game. He believed that every role requires specific attributes, and every person has specific strengths and weaknesses. The job of leadership isn't motivation, it's matching. Instead of asking, "Is this person smart?" Ray asked, "Is this person right for this role, in this environment, with these responsibilities?" That question changes everything. At Bridgewater, Ray focused heavily on track records, not promises, not potential stories, actual evidence of performance over time. He believed that past behavior, especially under stress, was the best predictor of future behavior. This made hiring and promotion uncomfortable. People don't like being evaluated honestly, but Ray saw honesty as a form of respect. If someone wasn't performing, pretending otherwise didn't help them or the company. Another key idea in this chapter is ownership. Ray believed that the right people don't just do tasks, they own outcomes. They take responsibility when things go wrong instead of explaining them away. When something failed, the question wasn't, "Who messed up?" It was, "Who was responsible and what broke in the system?" That mindset builds accountability without fear. This principle also applies directly to personal life and money. Many people struggle financially not because they lack information, but because they rely on the wrong people, decisions, partners, advisors, or even their own habits playing roles they're not suited for. Ray believed that if you're bad at something critical, you shouldn't fight reality, you should design around it. If you're bad with money, automate it. If you're emotional, create rules. If you lack discipline, reduce decision points. The practical takeaway from Chapter 15 is simple, but uncomfortable. Stop expecting people to change and start placing people where they naturally perform best. That includes you. Know your strengths, know your weaknesses, and be honest about both. Ray Dalio didn't build Bridgewater by finding perfect people. He built it by aligning imperfect people with the right responsibilities. And when that alignment works, execution becomes easier, faster, and more reliable. In the next chapter, the final one, we'll see how Ray brings everything together by focusing on systems and machines. Because once you have the right culture and the right people, the last step is building a machine that produces results consistently, without relying on constant effort or emotion. That's where true leverage lies. By the time Ray Dalio reaches the final chapter, one idea stands above everything else. If you don't build a system, you become the system. Chapter 16 is where all of Ray's thinking comes together. Culture, people, principles, and decisions all feed into one final objective: building a machine that works consistently, even when emotions run high and conditions change. Ray believed that most people live reactively. They solve the same problems again and again, personally, emotionally, and manually, and that's exhausting. He wanted something different. He wanted a machine. In Ray's view, a machine is any system that takes inputs, processes them using clear rules, and produces predictable outputs. Businesses are machines. Teams are machines. Even your personal life can be a machine if it's designed intentionally. The mistake most people make is trying to work harder instead of building better systems. Ray didn't ask, "How can I make better decisions today?" He asked, "How can I design a system that makes good decisions repeatedly?" That shift is everything. At Bridgewater, this meant documenting processes, defining responsibilities clearly, measuring outcomes, and constantly reviewing what worked and what didn't. When something broke, Ray didn't blame people first, he examined the machine. Was the design flawed? Was feedback delayed? Were incentives misaligned? This approach removes emotion from problem solving. Instead of reacting with frustration, you analyze and improve. Over time, the machine gets stronger. But here's the most important part of this chapter. Great machines must evolve. Reality changes, markets change, people change. A system that doesn't adapt will eventually fail. Ray treated systems like living organisms. They weren't built once and forgotten. They were tested, refined, and upgraded continuously based on real-world feedback. That's how durability is created. This principle applies directly to personal finance. Most people manage money manually, deciding every month whether to save, invest, or spend responsibly. That works until stress, fatigue, or emotion takes over. Ray's approach would be different. Automate what matters. Create rules for common situations. Reduce decisions where emotions can interfere. When your system handles the basics, your mental energy is freed up for higher-level thinking. The practical takeaway from Chapter 16 is powerful. Stop relying on discipline and start relying on design. If something requires constant willpower, it's poorly designed. If something breaks under pressure, it needs to be redesigned. Ray Dalio didn't build success by being superhuman. He built success by building machines that compensated for human weakness. And that's the final lesson of principles. You don't win by being perfect. You win by building systems that work in the real world. When you design your life, your money, and your work like a machine and commit to improving that machine over time, you stop fighting reality and start working with it. That's how Ray Dalio built lasting success. And that's how you can too. If you found value in this breakdown and want to think more clearly about money, decisions, and long-term success, make sure you subscribe to the channel. We release weekly videos that turn the world's best financial books into clear, practical ideas you can actually use. If this video helped you, hit the like button. It really helps more people find this content. And comment below, what principle stood out to you the most? If you want to build wealth the smart way, not fast, but right, this channel is for you.